that's something I think you need to be black and white about, and you need to be decisive. If you want growth, look for growth. You want yield, start looking for yield and start looking for, for these kind of returns that you're after. And there's no right or wrong, but it is a strategy at the end of the day, and it's a plan that needs to be put into place, and you need to understand the whys of that decision.
Hey everybody, Dominic Neshi here, and this is another episode of the Wealthi podcast. I have Sam and Louis as always, and today we're going to be talking about why before what. This is, more of a personal topic. We want to chat about your reasons why behind making your investments and why you're working so hard to make money and create wealth. I'm looking forward to hearing what you two fellas have to say. So thanks for jumping on the show this afternoon.
Our pleasure.
Oh, good.
So tell me, fellas, why before what? Like, what has inspired you? Or what's the why behind a lot of your what you're doing? Like Sam specifically, let me address you because I've had the pleasure of seeing a lot of the designs for your developments. I've seen some of your previous developments, and if people buy properties because they want to eventually retire. People do it because they want to have that passive income. And if you don't mind me sharing, you've bought this site, you're developing 3 townhouses, and you could just as easily have built, a bunch of little dog boxes and gotten the rent that you wanted, rather than spending so much time and effort to do this beautifully designed townies to achieve, your outcome. What's going on there?
Yeah, sure. Look, it comes down to I think a personal preference in terms of having pride in the work that you in the work that you do. So these specific townhouses that you mentioned, Dom, are something that I'm particularly very anal about, because I want to provide some kind of sustainability homes, and something that's going to stand the test of time, as opposed to me just wanting the quick buck and selling and keeping and et cetera, et cetera. To me, I don't have to go and for example, floor to ceiling say tiles or marble walls or marble feature walls, et cetera, et cetera. I don't have to do that. But for me, I feel as though I want to provide value for the buyer, because whoever buys these homes, I also think about that they're very similar to me and take pride into these details, and also want something to present nicely and want to make their own abode a very comfortable and personal one. So my whys for creating these really stem down from my father was an immigrant, came to the country in the 70s, and I grew up all hearing nothing but terraces in Richmond and Melbourne were offered to me at 15 and 16,000, and now they're 1.7 million dollars, and I wish I bought that, and I'm so silly for not buying that. So I was fortunate enough to have a father that made a living, but also informed me of his mistakes. So my whys are wanting to take a little bit more risks than he did, and taking that leap of faith, I guess, and having some courage in making some good decisions and some good risky investments for myself. And I feel as though that's what happens over the time that you build a portfolio, is that your first one might not be the perfect investment, but you simply just learn on the do's and don'ts and I guess the pros and cons. And I always tell my clients there is no such thing as a perfect investment, but if it hits 80 to 90% of the brief of your prerequisites about what you want to purchase, I feel like that could be a good stepping stone into something bigger and better. And everybody does have their own ways. Dom, some people want, financial freedom, in their retirement, which is, I think is a very cliche, very standard response. But for me, my whys really stem down to me, having, I guess, conviction into my investments and wanting them to really perform for me, for the years to come. So, and I am younger, and I do say that I have learnt the hard way, but my whys really stem down on really taking a risk and wanting to see a decent portfolio, in the next decade or so.
But it feels like to you, or to me, that you're also expressing yourself through your investments.
Yeah, sure.
Some people could just do something vanilla and they'd get an outcome. Yeah. But it sounds like you're trying to show a bit of yourself through the assets that you're buying.
Sure.
Maybe I'm going too deep.
No, it's true though. My brother calls me, you're very, very fussy when you could just, pick that, for example, specification, which is that much cheaper but looks the same. I said, yeah, but it isn't. And for me, it's having that integrity and providing the best of value or the best of quality in the things that I do. And again, it's a personal thing for me. So there are shortcuts, and I've seen people take shortcuts, and I've seen the outcomes of it, and it's something that I don't want to be a part of. So I'd rather do things properly and do things, do things once and for all. So do things properly once and for all. So I guess they're my whys, and they're my personal whys. And Tom and Louis, we speak to clients every day. Everybody has their own whys, and they're all very important as to why people invest. But I guess the fundamental reason is just having something for later on, and that is the whole point of why people buy properties. For me, in a way.
That's interesting, because I think about people's motivations from that Maslow's hierarchy of needs. I don't know if you guys have seen or heard of it, but at the bottom you've got, food, water, shelter. That's trying to protect and look after yourself. Then after that, it starts to get more complicated. Like then you want to, once you've got enough money and making good money and you feel confident, then you want to start looking at artistic pursuits. You want to have fun. You want to go out to dinner. You want to start expressing yourself. And then after that, you want to start giving back. You want to start doing things of what's my impact and what's my legacy. And it sounds like with you've kind of moved past the whole, I've got enough money to eat and I'm okay, where you're trying to more or less self-actualize and do more with your investments, which is a very confident thing to do. It's a sign of an educated and sophisticated investor. You've moved past just the basics.
Well, to me is that more isn't better. For example, that townhouse, I could have got 4 on there. But for me, I'd rather say do less for more, which could have, which equated to, a less of a return for me. But I feel as though, providing, some decent quality is something that I pride myself, with, and and I don't want to be part of a certain category as a greedy developer, et cetera, et cetera. So definitely, it's they're my personal whys, to a T.
Louis, what's going on, man? Over you're relatively quiet on these podcasts, but you're a funny character in that every time you talk to Louis, Sam, I don't know if you noticed this, but he's always got some interesting story, or there's another piece of his character that comes out. There's so many layers to Louis that always comes out whenever you ask a different question. And one reason why I like working with you, one of the reasons why I wanted you to be a part of the Wealthi team, is I felt this like innate hunger and desire to just go and do something and just really, really push. And where did that come from? What's sort of the why behind your investments? Like you're buying heaps of different things and moving into the property ladder now.
I think I had a thought about this earlier, and I think that my why stems from, it might be probably more on the cliche side of things. I am the youngest of 3 siblings, meaning that my age gap between myself and my brother is, I think, 13, 14 years, meaning that mum and dad are in their stage of their life of retire, or dad's retired, mum's retiring. and they're both very hard-working people. Mum was a primary school teacher. Dad was in the car industry. And I sort of came to a realization that my want was to be able to give back to them what they gave to me growing up. And my window of opportunity to do so is a lot smaller than maybe someone else's because of the age gap between my parents and I. So me being 20 now, Dad being 60, 63, I've got a smaller window of time to really push ahead, take riskier investments, and put money in the bank to then show them and provide them a happier retirement for the rest of their time moving into, say, so they don't have to be worried about any more financial stress. They can live what they want, and everything can be paid for and provided for by me. But if I put that on me, I've got to really start making calls at a younger age, at me at 24, to start working hard, putting assets under my name, putting different investments into play, shares, I don't know, your cryptocurrencies, whatever, anything that I can turn into more money to essentially then provide for mum and dad and, and all my family, for, my future wife, if there ever be one, and the kids that come along after that, again, if there ever be them. And my sister and my brother and their family. That's where my want for investing is to give back to them, and also to be able to have a stable sort of future in case anything happens to me as well.
It's interesting you said it like that, because it does seem like when we talk about investments, you are a little bit more aggressive. You are a bit more. You're after the bigger returns. You want more growth faster. You're not looking for small bits of cash flow over a longer period of time. You're not a defensive investor. You're very aggressive, and you're about trying to make as much money as you humanly can as fast as you can.
Yeah.
And
it seems like
really understand that.
It seems like get rich quick schemes, but I've seen too many times happen to people closely around me. Just don't take opportunities or don't take risks, and then in 5 years' time, it seems to say the exact same thing as, no, you should have done that 5 years ago. And so if I can take that and hold that into my own advice, I should have been doing stuff 5 years ago to what I was now when I was 19 years old. But if I can take that from older people, like a little bit older than me, like you two, or generations above, like Dad or my brother,
like then, Peter.
He's the perfect example. And so taking that on board, I think that if you press the button hard now, it's going to work out better for you. So I talk to people all the time that they want to go, I want to do two investments this year. I want to do this and this and this. And if you have the capability to do so, and you're more of the riskier type, then that's probably my style as well.
And it's funny because you're in the instant gratification generation. So it seems like it's a wise approach. Everybody wants things now, and everybody is in crypto because they want that big lump sum overnight or whatever it is. But reality is investment return equals time. Yeah. So.
But I just know. I know the quicker I get in, the quicker the rewards. Not more or less not like a time thing, but I always take the right word of advice from you, Sam, as well. Especially that these investments, I know we talk about property market, rising in 6 months, or property market, or where we're going to be in the next year. But I still wholeheartedly think if we're going to invest in the property market, it's 10 to 15 to 20 years time. But the accumulation of these assets over the next year or two is what's going to really be dividing factor between someone who doesn't pick up assets now or someone who does pick up them and they look at where they are in a big chunk of time, say 10 to 15 years away.
I actually understand both of your investment strategies in the way that you think, because Louis, I feel like I was that when I first started. I had a massive bee in my bonnet. I'm the eldest sibling. And, I felt like I had to pave the way, and, my family, there wasn't a lot of money around, and I wanted to prove something. I wanted to be that center of influence and the person that people could rely upon, and, I could create a strong foundation of assets. And I wanted to do it really, really quickly. I was in a mad hurry because I felt like I was running out of time. The funny thing is, 10 years later, I'm 33 now. I feel like I've got more time up my sleeve, and I'm becoming more patient with my investments. Where before I was in a mad rush to get everything done, you actually realize that making those rush decisions can actually hurt you. And I've made rush decisions and hurt myself and lost money. Where I realize now that if I am way more practical and pragmatic and I slow the process down and I'm a lot more methodical, maybe do a lot more with less, like Sam's talking about, you'll achieve huge results. It's interesting because I like to talk about what the why is, because it helps us understand then what the strategy is. I want to use two quick instances or two quick examples. Some clients come to us and they want cash flow. Now, they're very defensive. They want to pay down debt. And I completely empathize and I get that, because if they were to go buy, say, a Brisbane house and land or a Canberra unit with a 4, 5, 6% yield, they can structure that investment so that it pays down the debt, and then they can also pay down the debt, and they can have an unencumbered asset. So that means, you guys know it, but for the people that are listening, it's an asset that has no debt in 15 or 20 years. So whatever your age is, add 15 or 20 years, imagine then living off a passive income of $25,000, $30,000 a year. It's not huge, but it's still significant. The other side is you can go do something where you're going straight after growth, like those Melbourne townhouses where, you're buying it under market value, and we know that it's probably going to double in value over the next 7 to 10 years. The cash flow sucks relative to other stuff, but you're going to get a huge amount of growth. And now this is maybe someone that's a bit more entrepreneurial, someone that's a bit more aggressive, doesn't want to pay down the debt, and they just really want to hammer. So it's fascinating for us to then sort of get into the why behind those investments.
Do you think, Dom, there's a... You go, Sam.
Go, Laurie.
Do you think, Dom, there is obviously they have their own, paving their own path, they have their own strategies, and they're both really good investments. But do you think one is an age investment and one is or time poor investment? Like if I was to say to someone, or someone else come to me, look, I'm 38 years old. I haven't bought an investment yet. I'm really, I was gun shy for a long time. Now I've got a bit of cash saved up in the back of my pocket. I want to buy something. Would you steer me towards the cash flow, or would you steer me towards the high growth?
I want to start. This isn't financial advice. I want to hear what your opinion is as well, Sam. But it depends on that person's character.
I agree.
It depends on how hard they want to work. It depends on what their risk appetite is like. I will always be running hard for the biggest growth and I want to try and get as much gains, because I have some friends or acquaintances that are my age and it feels like they're trying to retire now. As in mentally they're slowing down, they don't care, they don't want to push that hard. Where I've met some 55-year-olds, 60-year-olds that feel like they're still bloody 25 or 30, where they're still trying to grow and they're still trying to ramp up. So age for me really isn't the question. It comes down to their personality and what their drives or motivational ambitions are.
Sure.
What do you reckon, Sam?
I'm with you. And that's really important that you said that. It's based on their character. I know I always tell my clients, it's dependent on your investment strategy, but I also feel investment strategies are also linked to personality types and people as well. So I agree. And I have to say, you can't have both in the get-go. They can probably meet at some point, in the period of time, but you should be very clear as to, your why and as to what you want out of the asset and in terms of what kind of performance you want out of it. I had a client, a couple of months ago, just sent me a message just earlier today and said to me, he's bought something off the plan, and I pushed for him. And he sent me a message saying, I'm really sorry. I was a very hard client for you, but I'm so happy that I made the decision, because he's already seen growth. And I have to say, he hasn't settled on the property, but there are others that have sold in the complex for a lot more, exact same square meters, exact same, kind of dwelling. And he was the kind of client that wanted everything. And I had to push him to a corner, say, you want growth or you want yield? And he said growth. And it worked for him. So that's something I think you need to be black and white about, and need to be decisive. If you want growth, look for growth. You want yield, start looking for yield, and start looking for, for these kind of returns that you're after. And there's no right or wrong, but it is a strategy at the end of the day, and it's a plan that needs to be put into place, and you need to understand the whys of that decision, because that will be that will determine your portfolio and the foundations of your portfolio moving forward.
Completely agree.
Great.
Why? We have some clients that, hey, I just want to be able to provide for my family. I want to have a passive income. I don't really want that much debt. I want to play very safely and securely.
Yeah.
Great.
Yeah.
Maybe we'll take smaller bites. We'll go smaller investments.
Yeah, sure.
High cash flow, pay down those assets, and then we'll take more slowly methodical steps. Then we have some other clients that are like, hells no, I want everything today.
Well, I had a client that said, I want growth. And I said, great. Well, this area grew by 8-9% in the last, say, 12 months. But it's also got a nearby train station. He goes, oh, a train station, that's too close. And I said, are you after growth, or are you scared? It really didn't make sense. So you need to remove the complete emotional factor out of it, and be concise and clear and firm on how you want to strategize your investment. Because like I said before, it generally is the foundations of the portfolio that you intend to grow. I'm talking too much. I think I should pass it on to Louis.
No, that was my question.
No such thing.
Answered perfectly, I think, as well.
How about you, mate? What are you looking for your next investment, Louis? Based on everything that you've said, what kind of orientation are you going to structure your portfolio?
My goal is to pick up something in the mid-tier range, and I'm going to go. I've steered my strategy around growth to first off, because I'm probably more of the aggressive, riskier type. I don't really mind if it's putting a great yield in my pocket. I know that if I pick the right asset at the right time, it's going to grow faster than I can, or than a lot more than the money that's going to be putting into my pocket each week. And it means that if I have to work harder and put more money in my own pocket from working hard, then I can service the debt, the interest itself. Then I'm probably going to go for something that's going to have the potential to grow, rather than rather than the yield play to start off with. But that's just that. Again, that's just backing on my personality type. So I'm looking to pick up something like that at the end of the year.
That makes perfect sense. Okay, well, look, I really do believe in that. Growth strategies are the way to go for if you want to create that equity, and if you're feeling like you can shoulder the weight of the expenses for that property. And then, certainly I understand, like Tiffy and all her clients, they really, really love cash flow strategy, and that makes a lot of sense to me as well. So I see it on both of those, but then again, we're bringing you back to that why and what's driving you, and why are we making those investments? And it's hard for us. We say to clients, don't use your emotions when making your decision, but the why is what's driving them in the first instance. The emotions what's driving them to go buy. Emotions causing them to save the money. Emotions causing them to go and work their asses off. And then once they're using all this motion to get there, and then once they get to the deal, you're saying, don't use your emotions, switch it all off and forget about your why. Now we need to be logical. That's a very, very difficult thing for a client to do. So I completely empathize.
I think so too. I think that I'm running out of time, not in the factor of age. I'm still very young, but running out of time is in the way that the more people sit back and wait, the more prices rise, the more things in the world change, and if there's opportunities to buy, then we should be buying. So when I'm thinking in that way, and for a growth strategy, it means that I can probably buy the second one and the third one and the fourth one a lot quicker than I would have the first, because I'm saving up all this cash now to put a deposit down. But if I can buy and use the equity to buy again, and that's my quickest way to the end goal of having lots in a small amount of time, then that's probably that's the direction I'm heading in.
Okay. Well, fellas, I think we've really tapped it on the head. Let's shift gears a little bit. I'm seeing a lot of people now, and I'm seeing a current affair and all these different things. People are really screaming doom and gloom. Are you scared at all for your property or for your investments? Are you feeling it?
I'm just going to be really blunt and say, if you're really scared, then any kind of investment is not for you. You can sit safely, sit comfortably in your own home, and not take any risks and watch things unfold. So current affair, they could show all these, horror stories, etc. But at the end of the day, it's either you're wanting to take a punt because that's what it's all about, or stick to the 6:30 news channel and see what else what else is happening.
Most of the people pointing those fingers will be the people who haven't taken a risk, and that's fine. As Sam said, that's like, if you don't want to take risks, then you don't have to. No one can force you to do anything. But if you're not taking the risk, then I would say pull your finger back and don't sit there and point at other people doing the risk. So we see it too much, especially in this world. It becomes, people love to, I don't know what it is about our culture here. We love to tear each other down in that way for people who are just having a go or doing good. So yeah, as Sam said, if you're going to take the risk, I think it's a risk and you're going to take it. But I don't think there's a lot of doom and gloom coming. I think we love to predict doom and gloom because it's a lot easier to say when doom and gloom doesn't come, oh, it wasn't so bad, rather than to say it's going to be great. And then if we go through a bit of a downfall, then it's, you look worse. So I think it's a safer thing to say a doom and gloom's coming.
Yeah. Go for it, Dom.
It's not going. No, I was going to say it's not going. I don't see doom and gloom coming. Nowhere's. I'm killing. This is stressing me out. The sweat patches are coming out. No, I don't see it happening anytime soon. I will say that when we do see interest rate rise in the future, it will happen. I mean, the government is stopping the buying of bonds or selling of bonds at the low interest rate. So eventually, the banks will increase interest rates. That'll happen in a couple of years, maybe. And then that's when we're going to see some changes in the market. The other article that I wanted to talk to you fellas about that I saw the other day was, is the Great Australian Dream over? And let me just explain the question. The Great Australian Dream of buying a quarter acre block that you can just go buy your own home and live in it, like as your first step. Is that Great Australian Dream over for the average Australian?
I think the Great Australian Dream has its path to completion has changed a lot. I think the old work 9 to 5, put every penny in your pocket is sadly not going to get you to the Australian Dream anymore, because it's just you need assistance to, I think, see financial freedom, or as you said, the Australian Dream of owning the quarter acre and in your dream home where you want to live. I think that to get there, there has to be a new path taken, and we can't be following the path where the Australian Dream was created in the 80s. I
agree, absolutely agree, and I concur with Louis that it's definitely shifted and it's getting harder for that Australian Dream to happen. So, I think you need to take a bit of a detour, about how to get there, and to help you expedite to get to that goal. Things are becoming more valuable than they were 30 years ago. Land's becoming a little bit more scarce. Australia becoming a baby country is starting to diminish because people want to get into the country. So there is a lot of reasons as to things are, the goalpost is constantly going to shift. And it's either you act now and get closer, or sit and, like I said, be comfortable and see that goalpost fade away. Damn. I
really do agree with you with there, because this is whole back to the emotion, the why. Because I talk to my cousins, my family, my friends, and everyone's like, "Hey, I want to go buy my own home," but they've got this ideal of buying in this ideal area. They can't afford it, and it keeps on getting further away, which it sucks for them. But I have to say, you have one of two choices. One, you either manage your expectations and go buy somewhere you can fucking afford and just get used to living in an area that you don't want to live in, or learn to love that area you want to live in. that you don't really like to live in, or you go and buy some investments and then earn your way towards buying your own home. I think everyone in Australia has been spoilt for such a long time, and I always say this story, but I lived in New York, I lived in London, and the people in London and the people in Manhattan don't have this unfair expectation that their first home is going to be in Manhattan. Like, no one thinks that. And in London, the people that live there don't think they're going to buy their first home in Mayfair or Knightsbridge or any of the areas in central London. You got to go buy outside of London. You got to buy outside of Manhattan. And it's a simple fact that Sydney is becoming more and more valuable, and you're just going to have to, bite the bullet and become an adult about it all.
Touche.
Wholeheartedly agree.
Oh, that's my ramble. I think I watch too much TV in these news shows.
Final message to listeners, Dom?
Final message. I think that people are scared. They've got the fear of missing out is out there, and that's legit because the deal, a lot of the good deals are now already gone. They've missed out. Their fear of missing out is legit because they've missed out. But there are some really, really good investments out there. It's just not what they're trained to think. So they need to widen their perspective, open up themselves to different things that they weren't anticipating, and they'll be pleasantly surprised. Units are going to be a really good investment going forward. Buying interstate investments isn't as scary as they think. And, going and talking and getting advice isn't a sign of weakness. Just let your guard down and take advice from good people, and they'll be pleasantly surprised. That's my big message for people out there today. You too?
My final message would be, I don't want it to sound like we're preaching to 100% of the population. If you don't want to listen about investing, or if you don't want to think about property buying, or you're not interested in it, don't listen, don't comment, just put it aside. If it's not your interest, then it's not your interest. Mum taught me from a very long age that other people have different interests to you. It doesn't mean they're not cool, or doesn't mean they're not the same as you. They just don't like what you like. And I thought, okay, that's fair enough. So if you don't want to listen, don't. But also don't be afraid to ask questions if you are interested, and then don't shoot the people down who are having a go. That's it there. So if you don't want to listen, don't want to listen, but don't talk to, if your friend wants to listen and wants to explore investment options and talk about different things, then there's no harm in doing that. And I encourage it highly. So, but don't bring other people, going out there having a go at different little things if you're not into it yourself. That's me.
I like that. It's very encouraging. It's very comforting, actually. But so in a nutshell, Louis was just saying, if you haven't bought anything, don't discourage others of buying. That's really about it. Got nothing constructive to say, don't say it at all.
Say nothing.
Yeah.
I won't add to that. I think I'll be on board with both your conclusions.
Towing the line today. That's unlike you. Come on. Well, guys, as always, I really enjoyed catching up and talking with you. We have these conversations in the office, so it's good that our friends and family and our clients and customers and viewers and audience get to listen to it. All of you out there, we love your support, and thank you so much for leaving comments, even if some of it's not that nice. We'll still take it, and we'll come back to you.
Love you all.
Love you all. Have a great week, and we'll see you all next week.